Welcome back, and let's put the spotlight on some of the cement counters because two companies have already come out with their earnings. One is Dalmia Bharat, where the numbers have been weaker than the street estimates. The volumes and the realizations have been way below than what the street was penciling in. And the other one is India Cement, where we have seen a double-digit decline on the bottom line, and definitely that stock is down in trade right now. But let's understand more that what is the cement counters are up to, what kind of an earning expectation are we having at this point in time. And for this, we are being joined by Mangesh Bhadang, who is the Senior VP at Centrum Broking. Hi Mangesh, thank you so much for your time. First up, help us understand what do you make of the earnings that we have till now, because overall in the last couple of months or so, we have seen a lot of these upgrades and positive notes flowing in on the cement counters where hopes were pinning on some of the price hike stability. Other than that, the realization expectation was actually positive. But given the earning disappointment, do you feel that most of disappointment that we have seen in Q3 is already priced in, and the analysts should now are looking for the way forward in terms of better realization and pricing?
Yeah, hi, good afternoon. So as you rightly said, 3Q anyways, we were expecting that, it will not be a blockbuster quarter, but obviously sequential, because 2Q had been so weak, sequential improvement could definitely be there. Out of the results that have been declared, I think Dalmia probably is the right comparable to look at for the industry, wide, points that we can take it out from. So while the realizations were probably better, but I think volumes were down for the company. And overall profitability in terms of EBITDA per ton improved by, say, around 110 rupees on a QQ basis, whereas I think ideally it should have been up by at least 160, 170. So still some more room for improvement, but I think, this also has to do because of the higher exposure to the southern region that Dalmia has. So the way we read the sector right now, I think most of the 3Q earnings have largely been priced in, whatever weakness that is going to be. And in fact, I feel that some of the north and east-based companies, as well as even the pan-India companies, might surprise positively on the realization front. So that is something probably we need to, wait and see. Second thing is on the impact that 4Q can have. So December has seen substantial price hikes in non-trade segment. There has been some hikes in the trade segment as well. So I think that's going to have a very positive effect on realizations of cement companies. So far, the higher prices have sustained and have been absorbed in the market. So I think 4Q is a quarter wherein we might expect that it could be a bumper quarter after a long time for cement sector.
All right, Q4 is expected to be a bumper quarter in terms of the earnings then. But Mangesh, the cement pack is quite scattered in terms of the market that they cater to. Some companies are related to the southern India, some cater to the northern India part, and even we do have some plays in the northeastern side. But help us understand that given that Q4 fine print and Q4 outlook is better, then which market is expected to perform better?
What we see is that the combination of north and east will do well, wherein we have seen very high price hikes, as well as the demand growth expectations are also very high in those markets. I think south is the only region wherein we still see that the price hikes are yet to pick up, and even the demand momentum has been very slow. So barring south, I think the rest of most of the other regions should do well, and within that I would pick north and east as the region which should actually drive very high pricing as well as demand growth for the sector.
All right, Mangesh, with this we'll let you go on that. Thank you so much for taking the time out and speaking with us.